Good morning, everybody. It's the 3rd of February. We're Signal Centre Talking Ball. I'm Joe, joined by Steve. How you doing this morning, Steve?
Yeah, pretty well, mate. Yeah, not bad. How are you?
Yeah, good. Very pleased that we seem to be back up and running on TradingView today. We've missed a couple this week due to a few technical issues, but it looks to be all okay this morning. So hopefully uh, people will be engaging today, letting us know what markets they're looking at, and we can have a good stream today.
Yeah, lovely. Yeah, brilliant. Nice to be back.
Superb. Yes, indeed. Right. Pretty interesting 24 hours in the markets. Some big moves in a number of asset classes as a result of the really important data that we've had out. The data doesn't stop there. We've got non-farm payrolls later today, so more volatility expected. But let's have a look and round up the past headlines over the last 24 hours. So I'm just going to bring up the headlines now. So first up, the Bank of England hiked rates by 50 basis points, taking the overall rate to 4%. That was in line with guidance and the market expectations. There was a 7-2 vote for the decision, with a couple of dissenters in there calling for no increase in rates. The forceful forward guidance has now been removed. The Bank of England is confident that headline inflation will decline sharply, but it expressed reservations over underlying inflation. The bank expects a shorter and shallow recession, but GDP is still forecast to contract in 2023 and 2024, with GDP not regaining the pre-pandemic peak until 2026. Based on market rates, inflation is forecast to dip to below 1% on a 2-year horizon. The bank dropped guidance that it would tighten forcefully if necessary, with Governor Bailey not pushing back aggressively to the notion that rates could have peaked. Sterling resulted in some pretty significant losses yesterday as a result of that. So let's see how price action follows that up today. The ECB also hiked rates by 50 basis points as we expected, taking the overall rate to 3%, again in line with the consensus forecast. The bank president, Christine Lagarde, stated that the risks to inflation are more balanced than in December. She still expressed concerns over underlying inflation trends and warned that there is more ground to cover. Pointedly, Lagarde also stated that she would not say disinflationary forces are already at play. So the expectation now is that more rate hikes will be coming. The ECB President Lagarde stated that the bank's intention is to raise interest rates by a further 50 basis points at the March meeting. As a result of all of this, we saw global bond yields decline. There were sharp declines in the Eurozone and UK bond yields following the central bank decision, with optimism that rates were close to a peak, and the 10-year bond yield also declined to a 4-month low at 3.35%. Equities posted some pretty strong gains yesterday. However, overnight there have been some setbacks in the Asian session as the latest data earnings from 3 US mega stocks failed to meet expectations. So we had Apple, Amazon, and Alphabet all posting numbers yesterday. We may take a look at those if we get some time as well. And today it's all eyes on the employment report from the US. It's non-farm payrolls. Consensus is for an increase of 195,000 from 223,000 previously, with the unemployment rate edging higher to 3.6% from 3.5%. So we'll do a bit of a preview on that as well before we wrap up today's show. Okay, Steve, let's take a look at some markets. Want to kick us off with a look at cryptos?
Yep, of course. Share my screen now. So here we are. We're on Bitcoin. That's the main market that we look at, and price action over the last sort of 24 hours has sort of like looks like it's topped out a little bit. We saw a good rally on Wednesday. This is the daily chart. We've got the real serious resistance up higher between 25,200 and 20,400. Yesterday's candle is a shooting star candle. Now, this is a really powerful candle, especially when it's followed up with a bearish day on the Friday today. That will be a shooting star formation. We can see a nice little top out here, and towards the end of the day, sellers came in and prices moved lower, leaving that shooting star looking a little bit vulnerable really overall. So on the hourly chart, so short-term price action we're really looking at from this chart, we've broken down below the Ichimoku cloud. So for me, forming a bit of a bearish flag here, or bearish pennant rather. The level to watch is 23,378. around about that area. A breakthrough there could lead to this a short-term double top playing out. You can see the peak here, the peak here. This will be the neckline. We're below the neckline, so it's looking vulnerable at the moment. We're below the cloud, but really need to get that little bit of momentum pushing it through 23,380. And if we do get that, then I fully expect it to retrace potentially down to the 22,770, where the next support is. Looking at gold, let's take a look at the daily chart first and see how that performed yesterday. Obviously, with the dollar index that rallied after yesterday's news and formed a bearish outside candle. You can see a big bright red candle. We haven't seen a candle like that really until going all the way back to sort of early December. So that's engulfed the previous day's price action. It's engulfed actually pretty much the previous couple of weeks of price action. We're back down, and we're going to be challenging the support around about the $1,900 level. So that's for me, hitting that getting that new high out in the market yesterday with that spike up to 1960, and then reversing all of the gains over the last couple of weeks. That's pretty negative for me, but we still have support below, so we're not going to write gold off yet. But obviously dollar index has rallied up to close to 102, and as Joe's been talking about, he's really expecting a little bit of a corrective rally in dollar index. If we do get some momentum out of that, then we nearly got to that measured move target, which is a bit of a shame, but yeah, still opportunity to get there. But I think if we break down below this level, we'd have to have further downside really to sort of like retest the strength of this rally. Silver, same sort of price action, almost. Well, actually, it did the same thing, but because of where the market opened yesterday, it's not quite the same price action. It's still a bearish engulfing candle, and looks almost a bit like the Bitcoin shooting star. So that looks a bit vulnerable at the moment anyway. We've got the 55-day moving average coming in at 23.15. We've got this peak here, this peak here. In between, we've got this dip. So there's a neckline that we can look at and say there's a bit of support coming in around about this level, 22.75, and there's further support below, really all the way down to 2060. And that's a long way off, and it's not going to happen. I doubt very much it'll happen in one sort of trading session, but they're the levels to watch below. Again, we've got that inverse head and shoulders formation. Didn't quite get up to the measured move target, but did have an attempt. It took out all those highs previously set since the start of January, and yeah, it's January was a pretty decent month in the indices, and that continues to be so. We'll cover the indices a bit later. Or crude oil, negative again. We had the sort of like a little bit of a rally after the we had an attempted rally after the Wednesday's oil inventories. It didn't happen, and the move lower has continued. The 100-day moving average seems to have done quite a good job here in capping upside. We're at sort of like decent resistance level. The next serious one to watch really would be this swing low here, 72.58. Looks like we could test that over the next sort of like 2 or 3 sessions, and below that we've obviously got the $70 mark is the next sort of like support level. Oil, energy, natural gas and all that all remain under pressure, so really looking at a little bit of a different picture to the indices here. Again, same sort of price action in Brent crude oil. The levels to watch: the interim support coming in at 77.60, and the main support coming in just above the $75 level. And as you can see, Brent crude trading at a $6 premium to WTI crude oil still. Natural gas continues to move lower. It's really looking a bit sick. That's all you can say. I don't mind it. It sort of gives us an idea of what we could be paying in the future for gas. Hopefully, if that sort of like these low prices filter through and don't get scooped up by the greedy boys at the top. But yeah, so maybe we could have a bit of a look at dollar and see how that reacted higher yesterday, Joe.
Indeed, we can. Let's get the daily chart up for the US dollar. A couple of requests coming in for currency, so I'll get to those as well. So this is the dollar index. So yesterday we saw a pretty decent turnaround. So we've been highlighting this support level for a while now. This is the previous lows from back in May 2022. 2 days ago, we actually closed below that ever so slightly, but yesterday we actually gapped lower. So we opened up substantially lower, but then rallied quite substantially to actually get through the midpoint of that Marubozu candle that we closed with on the previous day. So that's a piercing line candle that we formed there. So potential for this to be the basis for a bit of a turnaround. We can also, if we zoom in here, see a bit of a gap higher on the price action today. So starting to maybe show some signs that we are going to get a corrective move higher. I've been calling it for a while just because the move low has been pretty substantial without really any sort of meaningful check back. So potentially we're going to see a bit of a rally here. Obviously, we've seen the reaction in some of the markets that are linked to the dollar index, like gold and silver, posting some reversals yesterday. So if we get some follow through here on the dollar index, then that could mean that these markets do move a bit lower. We also saw it in some currencies as well, like euro dollar to an extent, but more so in cable, which is obviously led by the actions from the Bank of England as well. So yeah, potential here, I think, for a rally towards resistance at around 103.45 on the dollar index. Now let's take a look at euro US dollar. We can see here that prices continue to trade within a bullish trend. We did have a 50% or do have a 50% fib level here at 109.42. If we look at the price action yesterday, we posted a new high on the session before closing, again below the midpoint of that previous Marubozu candle. May indicate a bit of a turnaround, but we do have this short-term trend line still in place. So for now, I still think maybe the dip buyers will have another attempt at trying to buy a pullback to that trend line in expectation of a move to the upside. However, if we get a break below the trend line on a closing basis, so come 10 o'clock tonight, UK time, if we're below that level, then that may indicate a break of the trend and we can start thinking about a corrective move lower. So yeah, watching and waiting on that one for now. It's cable that's really quite interesting. We've highlighted this major level of resistance now on a number of occasions. That's at 124.30. We can see that prices have continued to butt up against that level and failed to break through. If we look at price action in recent times, we can see that it's been very narrow and contained within a very tight range between 122.93 to 124.30. And eventually we've now seen a break below. So we posted a bearish engulfing candle yesterday, and at the same time closed below the short-term uptrend line. So that indicates we are going to see a corrective move, and we're backing that up with further losses today. It looks to be the worst performing currency on my watch list this morning, down by 0.31% as things stand. So pullback looks likely. Where we headed to? Well, I've got support here at 118.41, so that would be, I think, probably my first target. We can also look maybe for some fib levels, but due to the huge move lower that we saw here when sterling really capitulated following that disastrous budget, it means that there's going to be quite a spread on these fib lines. So the 38.2 is actually all the way down here at 116.48. So when we're looking for corrective moves in markets, typically we'll use things like Fibonacci retracement levels as a tool to predict where prices may go. And typically a 38.2% is kind of a healthy correction in the grand scheme of things. But if we get down to that level and take out this support here, then maybe what we're forming is a short-term double top. It's all very speculative at this point in time, but if we're going to get down to that 38.2, we're probably going to complete a double top, which is going to suggest we may see even deeper corrective moves, maybe as low as the 61.8%, which is down at around between 112.36 to 111.55. So potential for a much deeper move lower here on cable. Okay, what else should we take a look at? Some of the other cables, the other currencies linked to sterling have been pretty negative as well. I'm going to take a look at sterling Oz because from a technical perspective, this has got something pretty nice on the chart here. We're looking at a big head and shoulders top here that formed on the breakdown below support at 174.79. We can see here left shoulder, head, right shoulder. We actually got a bearish flag in there as well, which indicated a continuation lower, and prices have been on the move lower ever since. So we're fast approaching a support level here at 172.15. This was his previous high from back here in September. So maybe we'll get some consolidation here, maybe a little bit of a rise high before eventually moving lower towards our measured move target of this pattern, which was all the way down here at 166.79. So not looking particularly healthy there. Got a request to take a look at sterling yen, so we'll do that. We can see here that prices have been pretty sideways for a period of time, something like that. So the black line representing the kind of upper end of the range is at 161.52, lower end of the range coming in somewhere around here at 155.35, and it looks as though we're going to really give that another test in the next couple of days by the looks of things. We've got a 78.6% fib level below that at 153.66. All in all, the trend here, as we can see, is lower, and I would therefore suggest we're probably going to see a break lower from this support level and potentially move even further lower still. Let's take a look at the 4 hours, see if there's anything shaping up on this. So again, just really highlighted this range that we've got on the chart. I've posted up an intraday trade idea on our Signal stream. I'm looking to enter at 158.97. So looking for a pullback into that kind of level there, hoping for a continuation lower towards the lower end of the range. So still outlook is bearish on that for now. Also going to take a look at Swiss franc versus the Japanese yen. That's another request. If there's any others, guys, please feel free to post them up. Let's take a look at the daily first of all. And again, trend-wise, we've got a sequence here of lower highs and lower lows. So we are confirmed as being in a downtrend here. We can see potentially there is a larger top pattern that's forming. I've got resistance on here at 142.66 to 143.53, and I've drawn on that area there in red, which is kind of where I'd be interested in selling it. If we look at yesterday's price action, we can see that we closed below the low of the previous day, and we're moving lower yet again today, down by 0.22%. So looks as though prices are going to continue moving lower, potentially towards this support zone at 137.80. So still very much on the bearish side of things for now. If we take a look at the 4 hour, let's see what's shaping up here. So we've got a very short-term range here. Again, I was looking to sell into that region yesterday if given the opportunity. Didn't quite get there, and prices have moved to the lower end of that range. So now what we're looking for is some sort of reaction at this 140.29 level. If we get some sort of bounce here or some evidence of buyers stepping in, then potentially there's an opportunity to play that on an intraday basis to try and play this range. However, if we get a break, then ideally you'd be wanting to see a pullback to retest the newly formed resistance around 140.29 before potentially a continuation lower back down towards these lows that we posted in mid-January. Okay, New Zealand dollar, Swiss franc. Let's take a look at that. Again, go to the daily just to have a look at things on that front. So we can see here that prices are pretty mixed and sideways throughout this period here. I'm actually got this on my list of markets to sell. I mean, looking at this on the daily chart, you could argue that there is a bottom pattern forming here. It's not quite completed, something along the lines of this. Had a couple of attempts at trying to break through a neckline, but so far been unsuccessful. I always prefer a horizontal neckline rather than a downward sloping or upward sloping one. So I think if we can get through 60.33, then potentially that would signify that we have got a large bottom in place on New Zealand dollar versus the Swiss franc. But while that fails to materialize, we can argue that we're still in a downtrend here with this particular market. So selling into rallies isn't a terrible strategy, but just do be aware that there is potentially something brewing on a larger scale here for maybe higher prices. But I've highlighted a level of 59.61, kind of in line with this downtrend, and also really trying to retest that low of that candle prior to that big impulsive move low that we saw on Tuesday. So if we can get any retests of that level, I'd be looking to sell it, expecting lower prices to be seen. If we take a look at the intradays, let's see how things are shaping up here. Let's clear off these drawings just to have a look at it with fresh eyes. So we can see we've got some kind of range bound price action here. So if you are wanting to play this at the moment, just looking at the 4-hour chart, it appears as though we've got a bit of a range in play here. So it's really stuck in the middle of that range at the minute. So if you are going to play ranges, ideally you want to be selling towards the upper end, targeting the lower ends, or buying at the bottom ends, targeting the upper ends to really improve your risk reward profile of these trades. So my bias is for lower prices on New Zealand dollar Swiss franc. If I'm looking at the daily chart, the level that I'm really interested in is around 59.60. So if we were to look at that on an intraday basis, 59.60, somewhere around there. And then if I'm going to structure a trade around that, I kind of want my stop loss above the highs of this range, and to be targeting the lower end of the range. So it does give me a reasonable enough risk reward profile on that basis of around 2.5 to 1. So yeah, potentially an opportunity there on New Zealand dollar Swiss franc. Hopefully that was useful, guys. I'm going to hand it over to Steve now. He can talk about the US indices ahead of non-farm payrolls. And maybe we'll take a quick look at some of these stocks as well, the heavyweight tech stocks that reported yesterday.
Excellent, thanks, mate. Yeah, just going to run through the US indices first. Obviously, we've got non-farm payroll out. It's one of the most volatile. Has always been, notoriously been a really volatile day when we find out get a little snapshot of the employment picture. Now, I do believe that sort of like the real sort of big institutions have get a little bit of a heads up on this in terms of they're probably doing a lot of research into the figure before it actually gets published. So normally we seem to get a bit of a trend into non-farm payroll. We always get a bit. It's always like one of those figures that it tends to have a big surprise. So you know, and the market normally sets itself accordingly. So we'll have this period of volatility, and it'll just blend into the normal sort of data points we get throughout the week of the month. But yeah, it's going to be a volatile one, hopefully, because volatility equals potential opportunity. So that's why. So let's take a look at the Dow index. Initially, Dow 30, US 30. Price action from the week of Monday the 16th was bearish, but we bounced back really nicely last week. And this week, we're a little bit undecided about where we got to go. We can see the resistance is up at 34,365, and potential for, if we do get a break there, could retest this, the high we saw from the week of the Monday the 12th of December, just below the 35,000 level. Above the 35,000 level, we have a 78.6% Fibonacci retracement, which is a retracement that we look at a lot, and markets tend to fly to, and that's the move we've seen from last January to October. That was the sort of like the major sell-off, and then we had that bounce back towards the end of the year. And yeah, looking for sort of like potentially further upside. So at the moment, Dow 30 for me, it looks positive, and I would be looking to sort of like buy dips around this 32,860 level. And then if we do manage to get below 32,460, maybe that this rally is coming to an end. So yeah, resistance above, as I say, 34,340. Watch them levels carefully. But in terms of putting a sort of trade on prior to the market, it's not the best idea. It's always good to look for sort of like decent support resistance levels that the market can rally into, especially if it's with the trend. And you can see it is with the trend. This the daily chart rallying higher, so we are trading with the trend if we're looking to buy dips. That's the key point. You've got the moving averages, the 100 and 200 day moving average, that they've crossed over to the upside, so that's positive, and they're all the way down at this support level, 32,440. So if we do manage to sort of like see a spike lower, potentially there's some decent areas to buy into US 30. Stop could be placed below this reverse trend line or something like that. So that gives you a bit of a decent risk reward to the upside. Nasdaq's been asked about. This is the tech sector. So these are sort of like that. We can see that yesterday we had a really nice rally into this resistance level that we saw on the 13th of September. That was the swing high then, 12,877. we managed to just take that out. 12,894 we got up to before reversing quite sharply. So you can see that sort of the momentum stalled, ran out at these resistance levels. That was just in front of the double bottom that we highlighted. That was the double bottom measured move, was all the way up at 12,940, stalled just in front of there. So for us, that's probably that done in terms of hitting the target. It's only stalled in front of it by a few ticks, so quite a successful read on that from the measured move target of the double bottom. However, it has formed a shooting star. So really, again, like I said, at the was it Bitcoin? I think one of the first markets I looked at. When you see a shooting star, it's always nice to sort of like wait for confirmation to see a shooting star formation, and that would be it's a 3-candle formation. You get the rally up, you get the shooting star candle, and then you get the sell-off back down again, and that would give you a shooting star formation, which are pretty decent formations. When you see them sort of formations, either at the top, shooting star or evening star formation, or at the bottom, morning star formation, then they're pretty decent formations to watch and worth trading on. They get some good results. So yeah, watching that with a lot of keenness today. But as I said, the volatility that we're expecting, you know, it's the question: do you think it will be a buy or a sell on NFP today, US Tech? It all depends on the number, really. We don't know the number. It gets released at 1:30 UK time. Until then, it's a bit of a flip of a coin. So again, if we look at support resistance levels, which is where I would sort of be focusing when you get volatile numbers like that, notoriously non-farm payroll is a day that most intraday traders really struggle with. So it can be a big hit or miss. Normally you get sort of like a lot of volatility just before the number, and when markets go thin and there's volatility, people who have tight stops in the market looking for this big move normally get taken out. So because the market, the spread goes wider, and there's always a potential for a sort of like a spike one way or the other, taking you out of your position. So my advice would be not to trade really on the figure, just to sort of like look for the support and resistance levels afterwards. And if they're in line with the trend, which the trend is higher at the moment in NASDAQ, so looking to buy dips more than anything, I wouldn't really be sort of thinking, oh, this is a good opportunity to sell a rally, because we are in this decent uptrend, which is only really showing a slight sign of stalling with yesterday's price action, but that can be taken out in an instant with a decent non-farm payroll number. So anything to add on that, Joe?
Yeah, I just think if you're going to try and trade non-farms, I mean, if you try and sort of identify levels prior to the actual event itself, rather than trying to be reactive to what happens, you may stand a better chance. So when you're looking for levels, don't be afraid to put them at what look like unrealistic levels for the day, because if you can snatch a big move initially that's sort of way out of the typical standard, type of move that we expect to see on a market, then you might be lucky enough to get a fill, and you could get on side very quickly if you're at a decent resistance or support level. But I think reacting to the news is a bit of a mug's game, and obviously we've been doing this for a long time, and we've never found any sort of recipe of success for trying to trade this number. If you look at the sort of history of the data compared to the forecast versus the actuals, it's generally all over the place, which is why you get such huge levels of volatility, because the forecasts are generally so far away from what the actual number actually comes in at. And on average, over the last 10 events on something like Euro US dollar, you'll typically get about a 30 pip move on non-farm payrolls. On something like cable, it's around 40 pips, dollar yen around 50. And you're talking about 0.75% moves on some of the indices. So it is going to be pretty choppy out there.
Yeah,
I seem to have bored Steve. He's moved.
No, I
know he's
just
back.
realise it's coming up to 8:30, and there's an alarm that goes off every morning at 8:30, which really annoys me. So I've got the phone that's going to do that.
Okay.
I should really switch it off. But
are you done with the indices?
No, I haven't. Oh, no,
Oh,
yeah,
sorry.
I'm just waffling too much. Sorry. So let me just like speed it up a little bit. And there was a point you were making. Actually, there was um, one trading system I came across in my years and years of which for a time was successful. And I must admit, I haven't looked at it for about 10 years, 12 years, and it was the trading system on a non-farm payroll day was you took the candle 10 minutes after the release of the figure. So whatever the range was of that candle for the 10 minutes after, so you had a 10-minute chart, looked at the candle 10 minutes after, and what you would do, you would buy the break of the high of that candle or sell the break of the low of that candle. And then you would, and that for a good couple of years worked really, really well. But however, if you do get a really volatile candle, so if we were trading something like DAX or the Bund or whatever, you could have a sort of like a 60, 70 tick candle. Your stop was meant to be placed at the opposite end. So you'd run a really high risk reward trade idea, but you're only looking for maybe like a 1-to-1 return on it. So things like that have to happen a lot more regularly, and they go in and out of fashion. I think so, it's just a strategy that sort of like someone mentioned to me, but then the thing is everyone starts to look at it, and when everyone starts to look at it, it becomes a bit obsolete because everyone's doing it. So yeah,
Maybe
wouldn't
there's a little test for people today to watch over
yeah.
non-farm payrolls. Get a little 10-minute chart up, pick your asset and that 10-minute candle. Look to see if Steve's strategy or the one that he came across works out.
Yeah, I mean, it'd be interesting to sort of like pick a market today and see if it does work. I can't remember if it was a specific market it worked on. It might have been the DAX, I think, for whatever reason. It was like because we traded the DAX. It was an unrelated really to the US non-farm payroll figure, or maybe it was the Dow. Let's have a look. I'll have a look at the Dow, see which one it was. I'll try and dig out some information on it. Anyway.
Cool.
S&P, let's run through these quickly. S&P shooting star formation as well. So really looking at the 4194, that's the resistance we've taken out December the 13th high, but a shooting star. Will we form a evening star formation? Yet to see. Support really coming in around about the 3950 level. Let's look at FTSE. On the upside, obviously, we've got that 7903, the all-time high. We got the where we stalled on the 17th of Jan up at 78.75, and we've had sort of like a little bit dips being bought. Really, you can see that sort of like the spikes to the downside continue to be bought, and then we had a spike up yesterday, and that sort of stalled, posting a bit of a doji candle. But we're off to a good start today. But again, the trend is your friend. Stick with the trend. That's look for me. Dip buying in the FTSE as well. If we do manage to get a break, I think sort of this 55-day moving average probably bringing in some support around at the 76.35 level. And DAX continues to outperform to the upside. Brilliant. The last 3 days have been very positive in the DAX. We've rallied and away from the sort of like the 15,000 level, pushed higher, actually got up to 15,568 yesterday. And this morning off to a bit of a sluggish start. The rally has been sold into, but there's still sort of like plenty of time to go for the rest of the day. That's about it. I've covered off the
Okay,
majors.
let's just take a quick look at some of these stocks from yesterday, because we had these 3 tech giants reporting. So we had Google coming out with numbers. So prior to the numbers yesterday, we saw a massive gap to the upside, potentially completing a bit of a bottom in the process. So really strong price action yesterday, big kind of rounding bottom formation that's complete there. So, you could be excused to thinking that the move lower now is over, maybe starting a new bull phase in the market. But we have seen a pullback overnight. I think prices are indicating that they're going to open up around 5% lower on this. Sorry, 4.6% lower. So I've got the black line drawn on there. So there is going to be a pullback. So obviously, there's a big old gap here that needs to be filled. So you wouldn't be surprised if it did pull back to somewhere around 100 spot 4. To retest that, confirm that we've got some fresh buyers that are willing to participate. That move there looks like it could be a bit of a short covering move as well. It's just such an aggressive move to the upside. Looks like there's a fair amount of people ditching positions there because they're worried that the overall trend is now going to shift to the upside. Same situation really in the others. Let's take a look at Amazon. Big gap to the upside yet again. Price is indicating they're going to open a bit lower today, around 5% on this one. This is the worst performing by the looks of things. So, this is where prices are going to be set to open. We've got an unfilled gap at this level here, around 105.15. So potential for it to pull back to that kind of region. But again, looks like we've got this kind of rounding formation at the bottom, which suggests that the long-term trend may be about to shift and we could get a new bull run in these tech names. Finally, let's look at Apple. We can see again another gap higher. We've got an opening move around 145.94, around 3.25% lower. Again, looking for a gap fill there as kind of the first port of call to see if we can get some support there, challenge that as a support level, and see what appetite the bulls have to potentially drag prices higher. But all in all, starting to look a lot better than it has done for a number of months. So maybe we're going to start seeing an improvement in some of these tech names and really get a decent push higher in some of these US markets.
Yeah.
Okay, Steve, gun to the heads. Let's move this on because we've
Just
spent
quickly,
a fair amount of time today.
Sorry, Judge. Just wanted to go into the news sentiment. Just looking at news sentiment on this, we looked at Nasdaq yesterday. Was looking pretty poor, but we've seen an improvement in the news sentiment over the last 24 hours. So that's something to watch out for. And you can see the non-farm payrolls consensus is going for 187. Previous was 223. Unemployment rate 3.6. Previous was 3.5. Average hourly earnings 0.3. Previous was 0.27, and year on year 4.3 compared to 4.6. We've had a one day ago market alert, daily news sentiment moving higher, and 50% of the last 10 currencies price has risen within 7 days. So it's looking slightly positive on the news sentiment side of things. Just wanted to fill that in.
Okay, thank you, Steve. Okay, so gun to the head challenge. This is when Steve and I pick trade ideas live on the stream. As if we had a gun to our head, what would we trade right now? The ideas that we come up with must have stops and targets. They're all placed at markets and they must have risk reward ratios that are better than 2 to 1. We're now trading these live, so we've linked up a trading account to our TradingView profile. We put £2,000 in that at the start of the year, start of 2023. We are slightly down from where we started, but yesterday we had a decent winner in sterling CAD. So we're selling that early on in the session following the break of what looked to be a bit of a bearish flag. It has actually gone on to hit target, but at 9 o'clock, it wasn't quite at the target. So actually banked a 2.03 R winner on that yesterday. So that will certainly help the cause. Steve, you were selling Nikkei, suggesting it looked a bit toppy, but there was no real follow through on that to the downside. Although it does look like it's potentially rolling over a bit now. So sadly that was stopped out, but all in all meant that we had 1 hour worth of gains yesterday. So we'll take that for sure.
Yeah, lovely.
You got a trade idea for today, Steve?
No.
Can you find one? Because I haven't got one either.
No.
Okay.
Let me think. I'm just running through now.
Let's both have a flick through some charts and see if there's anything that stands out.
Yeah, I suppose the only thing that stands out for me, it's such a risky trade, is gold. I think gold's going to sort of take out that 1900 level, but it hasn't done it yet. So, well, actually, no, I'm going to go with gold because
well, listen, it's a bit of jeopardy today with the non-farm payrolls. I don't think we could either be heroes or look like absolute idiots today. So, like most days, really.
Yeah, no change there then.
Yeah, just an extra bit of volatility. So maybe we can go for some bigger targets.
Yeah, absolutely. Why not? I'm looking at gold. I think sort of my bias would be to sell gold or to buy indices, and usually that is opposite of what I like doing. So I'm a bit sort of stuck with that. Let's see. One thing I did say to myself, on these gun-to-head trade ideas, I wouldn't go with them unless the sort of like the short-term trend is on my side, like the 1 hour, 4 hour charts are below the cloud, which they are with this. So let me go with gold. It's going to be a difficult one because it's going to be difficult to stay in it, because you always tend to get that spike in gold, and we're sort of at a lower level now. So what I was thinking was taking a short position here, where were we, 1913, and really sort of like looking for a decent move down. If we do manage to break the 1900 level, then maybe we get down to there. It's quite tight though. Something like that. So I'm gonna, yeah, don't feel good about this one, but you never know. Take profit, stop loss. We want to risk 1%. That's risking, does that work out right, Joe? 1925. Yeah. Oh, it's risking slightly more than 1% then. 1924.39. So targeting a move to 1880. Yeah, that's 2.76%. It says 3% on here, which isn't correct because we're sort of like selling at market, so we've lost a little bit there. But does that look about right, Joe? Risking 1917. Yeah, that looks right. So let's go with that. We're short of gold. We've got to stop at 1924.39, targeting a move to 1880.
Okay.
On non-farm payroll day. You mad?
Good luck,
You mad,
mate.
man?
Yeah, we are. Right. Can you get New Zealand dollar up for me, please, versus US dollar? I'll show the chart. So I've been crowing about the fact that I think the dollar's going to have a bit of a rally for a while now. This is the New Zealand dollar US dollar chart, and it just looks like it's forming a massive inverse head and shoulders pattern, which if it breaks to the upside could mean that long term New Zealand dollar is going to significantly outperform the US dollar. But we haven't broken it yet, so it's only potential head and shoulders for the time being. So if we look at the daily chart, in fact, yesterday what we did, we posted a new swing high, but then closed below the level. So what we have is a bit of a swing failure there, which can indicate that we may get a bit of a turnaround. We've got a short-term uptrend line here as well. So if that starts to break, then we might see a decent pullback in the value of New Zealand dollar versus the US dollar. If we take a look at the hourly chart, it's currently trading at 64.63. We can see that maybe there's a bit of a range in play here. There's a big level of support here highlighted by this black line. We can see on a number of occasions it acted as resistance before finally breaking and then acting as support. So potential for it to get back to that level in the short term. We've got these failures up here. My stop ideally would be above these highs, but because the risk reward isn't favorable enough, it means I have to go in now with a bit of a tighter stop loss. So my stop loss is going to be 65.13.
Hold on 1 second, Joe. Just give me a second to get this on. Right, say again. Say the levels.
So 65.13
You're selling, aren't
is
you?
my stop. It's selling, yeah. And my target is 63.45.
Your target is 63.45.
Yep. And we're risking 1%.
I've got 2.27 risk reward.
Yep, absolutely.
There we go. We're on.
Okay, so feels a bit mad doing that ahead of non-farm payrolls, but we've got a gun to our head, so we've got to do something. So that's my trade idea for today. That stop loss, what we're talking about, 50 pips. Yeah, might not be enough because there is expected to be a big move as a result of this number, but let's hope it just dumps down to my target pretty quickly. That would be the ideal scenario. Okay, let's take a look at the day ahead then. As we know, we've been gearing up to it. We've mentioned it loads already, but it's non-farm payroll day today. We do have some ISM data out as well around about 3 o'clock. but it's all eyes really on this number at 1:30 UK time. So in terms of the expectations of that, we are expecting a number of around 195,000 from a previous number of 223,000, and the unemployment rate edging slightly higher to 3.6% from 3.5%. So if that number comes in less than 195, then that's generally, I think, going to be a good news for the market, and we'll possibly see higher prices from things like the indices and lower prices from the dollar index. If it comes in above that, then we may see dollar get a bit of a rally and stocks pull back a bit. And of course, that unemployment rate as well is important to watch. 3.6% is the expected number. Okay, Steve, bit of a bumper session from us today. Hopefully that was useful for people watching. Thanks for getting involved, for everybody that posted up on the stream. That's it from us today and for the week, and we will be back on Monday.
Lovely. See you all then. Good luck with
Cheers,
non-farm.
guys.
Are we gonna do a little show on random farm?
If we've got time, yeah, we'll post it up and see if we can do a quick 10 minutes over that. See if we can put your strategy to the test, maybe.
Yeah. Cheers.
Cheers, guys.